All right, so here's another trade recap from the week, a trade I took on the 13th of January. So the main reason for for these trade recaps is to give you all live examples from price action from the trades that I've taken to show you how I capitalized on these moves in price using ICT concepts and what are the confluences that led me to take these setups. And every time I talk about these confluences, these tools that I've used to capitalize on these moves, I'm going to be going into further details about it and to give you all some detailed insights from my experience in the markets for the past 5 or more years. Now, in the last video, we talked about the PD array to PD array theory, how price moves from one PD array to another. And when you have the order flow in line and you have a PD array to another PD array move and there's no resistance on the way for price to reach there, you could capitalize on it with the time frame hierarchy using the confirmations. So without any further ado, let's get into the setup. Now, as usual, as you all know, we start off with the higher time frame. We do a top-down analysis to understand the bigger picture and where price is trading into, what price is reaching for, where is price trading off of. So looking at the weekly chart, we're just stuck in this consolidation here. We don't have anything here that affects our setup. No bias, no direction, nothing. And that is absolutely normal. You should know that. If you don't understand the weekly chart, you don't know what's going on, that's completely fine. That's okay. You don't need you don't need the weekly or the daily or the 4-hour chart to be in a trending market to make money. Okay. Now, obviously, we do have this high here in this rejection block, which I talked about, and which I said that it would be high probability to see a run up higher. But as of now, we're in this consolidation, and we're not expecting any breakouts from the consolidation. As long as we're inside the consolidation, we're going to look for short-term setups. We're not going to trade as if we're looking for these huge volatile moves in price. Now, of course, if there's a consolidation market, it does not mean that every single time frame is going to be consolidating, right? So if we have, let's say that, let me talk about order flow first, and then we'll get into this consolidation thing. So what is order flow? When price is respecting discount arrays and breaking through premium arrays, so let's say it runs this high, uses a lower time frame PD array, and continues higher, it comes back to an order block, respects it, trades higher. This is bullish order flow, and the same is said for bearish order flow, where price respects premium arrays and breaks through discount arrays. Now, in a market condition like this, where price is respecting this order block, let's say, comes back, there's maybe a fair value gap here, comes back down, runs this low, comes back to a fair value gap, respects another order block, comes up here, there's another order block, goes back down. In this scenario, we don't have clean order flow, and this is basically trapped order flow. And using the PD array theory, you could trade in markets like this too. How? So, so let's say that we're in this consolidation and we trade into this order block here. Okay. Let's say this is a prolonged consolidation here all the way. Okay. Just put it there. Okay. Yeah, that's not good. Yeah. So we're in this consolidation and we have an order block here. As this is the 4-hour order block. And let's say that we have a 4-hour fair value gap right here at this point. So once price trades into this, even though the higher time frame is consolidating, the lower time frame is going to be trending from this move to this move right here. I mean, it's going to be trending all the way here. Even though the higher time frame is consolidating, these moves right here, this one and this one, these are trending markets on lower time frames, right? So assuming this is a 4-hour chart and we get a 15-minute confirmation and we trade it, this would be the low-hanging, highest probability draw on liquidity. Okay, so you can take advantage of these markets. And also, let me make it clear that in consolidation, the highest probability shorts are going to be on the upper end of the range, and the highest probability longs are going to be on the lower side of the range. All right. Now, getting back to the charts. So here we don't have anything, and neither do we have anything on the daily chart. That's fine as well. We run a daily high right here, but it was on the 12th of January, right there, on the 13th. There's nothing really that I was looking for from a daily perspective. But on the 4-hour chart, we did have a sweep above the previous day high just before the start of the New York session. And we have a fair value gap right here. Okay. So inside this 4-hour fair value gap, we have a 15-minute nested PD array. So if we refine that, nested fair value gap, sorry, if we refine that, it would be this uh, portion of price right here. Now, in consolidating markets, every single PD array is going to be respected, whether it's premium or discount. So you don't have, so any bullish order flow market, I know, of course, there's going to be little retracements when price trades into a premium array, even in a bullish market. But taking those trades, those little retracements, it is not high probability. But in a consolidation market, you could trade discount arrays and premium arrays. Now, what I saw here was that, let me mark the open of the day. It's right here. We have our Asian session from 20 to open right there. We have our Asian lows. We have this fair value gap here. And we have our London lows here. And what price does is before the start of New York session, it runs this high right here. Now, right when price runs this high, because we're in a consolidation, I was expecting a move lower. And if we see this in terms of PD arrays, we run this high, we come down lower. What do we have? We have this order block here, and we have this fair value gap here. So once price trades into this hourly fair value gap right here, let me just mark that out right there. We trade into that. And like I said, whenever price trades into a PD array, if it wants to continue lower, it's going to retrace and use another lower time frame or the same time frame PD array to break lower. So here it trades into this, goes back up into this rejection block, runs short-term high on the 5-minute chart, trades into this rejection block and continues lower. So once this is broken through and we have a liquidity pool below price, we have these Asian highs here and we have a fair value gap here. So whenever there's equal highs or trendline liquidity and right after that there's a fair value gap, that is a high probability drawn liquidity. All right. So what exactly happened here? Price traded all the way down there. I was not interested in any of this move because price action was being really choppy. And that's not what I wanted. That's not the condition that I want to trade in. Here, there's something interesting that happened once price trades into this. So where did we trade into this 4-hour fair value gap? And we trade down into the mean threshold of that 4-hour fair value gap. You see how perfect that is? Which is also the nested PD array on the 15-minute chart, which is this one. Okay. So that is a key level that price traded into. Get rid of that. So once price trades into that, let me open up ES. There we go. The candle. Okay. Right here. What do we see on ES? This is SMT. Now, what is SMT? So SMT, smart money technique, is the divergence between two correlated pairs. Now, these two correlated pairs are expected to move together, but in this case, one makes a lower low and one makes a higher low at a higher time frame level, at a key level. So this signals a potential shift in smart money intent. I use SMT when I have to trade off of key levels where we're already bearish and we trade into a key level. And I think that that key level will support price and will trade up higher. I use SMT to confirm the bias. I don't use it in continuation setups. So if price was already in a bullish move and I had to trade a continuation, in that case, I don't use SMT. This is only for reversals. Now, coming back to the trade, here we go. Oh, yeah. So what do we see here? We have SMT, we have a consolidated market. We trade into a key level right here. And here's where the magic is. What I always talk about, the PDRA to PDRA move. What do we have here? We run this low on the 15-minute chart. Okay. Now, if we were to give, if price were to give a confirmation from here, what is the next highest probability PDRA? Right here, the fair value gap. Okay. We don't have anything on its way to trade into that fair value gap right here. Okay. Now, obviously, I know that this is a really short target. It's the low-hanging fruit in this scenario. So that would be the highest probable move. And you see how price consolidates after that, wicks down. So this is where I took my profits. I took about almost 100% of my position. So I don't have any runners all the way up here. But the reason for that is because we're in a consolidated market. Okay. Price could trade into this and continue lower. Okay. Because we inversed this fair value gap here on the 1 hour chart. Price could trade into that, continue further lower. So in a consolidated market, I'm not looking for huge moves. Now, obviously, I could have held this, but I wanted to take most of my positions off at this key level here because that was the highest probability draw on liquidity. And I wouldn't do this if this was a trending market. If the 4 hour chart was trending, let's say that we didn't make this high here. Let's say that we started off here and we had a higher high, higher low, higher high, higher low, and we didn't have deep retracements like this. In that case, I would not take profits at close low-hanging fruits like this, but rather I would wait for price to go and trade into higher time frame objectives. So this setup was after price ran this 15-minute low right here. It swept this low, and we had a nice fair value gap here that was inversed. So that was my entry right there. Stop below. I also have this trade recorded. It's posted on my Twitter handle on X. Sorry. So you can go and watch that. This trade was about approximately like $2,000 across all my copiers. It was a 2R trade, about 1.8 to 2R. So that was a pretty good trade for the week. So we've talked about nested PDRAs once again. We've talked about order flow. We've talked about the PDRA to PDRA reading price. Once again, we've reinforced on these concepts. My only objective with showing these trade recaps and breakdowns is to give you all a better understanding on how price is delivered and how you can anticipate price moves yourself, how you can read price, and also if you've been trading in January. So January is not known to be a very good month. So if you've been taking losses, if you break even, it's completely fine. It's normal. It's part of being a trader. There are good months coming. And if you find value in my content, please subscribe to the channel because there's going to be a lot more videos. I'm going to be dropping these trade recaps once or twice a week. I'll try to look for trades where price is a little different. This one was a reversal trade where we caught the low of the day. I'll also look for continuation setups and how to trade markets like that, how you can hold positions longer. Every single trade is absolutely unique in itself. No two trades are exactly the same. So every trade has something to teach you. So that's what I'm taking advantage of by showing the trade recaps and just sharing my experience reading price for all this time. So that's it for the video. If you found this insightful, subscribe to the channel because, like I said, there's going to be more videos. We're going to be leveling up the content. So until next time, stay safe.